Philip Bateman on behalf of BDO here with David Blake, Partner for Corporate Tax. And David, we're here at the eve of the federal government's budget, the budget we had to have. And you opened by saying, if you don't vote, we don't care. What's that about?
Well, it's clear that if you don't vote, the government is unlikely to be looking after you. So what the budget was all about was providing, or continuing to provide, a significant amount of tax cuts to ordinary taxpayers. Yeah. So ordinary taxpayers vote, ordinary taxpayers are getting a little bit of a kickback. Small businesses, typically, they vote, and they're getting a pretty good hand. Extension of small business write-offs, which really shouldn't be underestimated. They're pretty important.
If you're talking about the $30,000 instant tax write-off being extended.
The $30,000 instant write-off. I said earlier that back in 1991, when Hawke and Keating were trying to kickstart the economy, they were tinkering around with depreciation and investment allowances and trying to get capital investment started. And this is a really simple, targeted incentive to get people out there buying plant and equipment and getting the economy going. So it's now in its third year, I think, and I've said for 3 years, I think it's a fantastic incentive.
Not putting it around for 5 years, because then somebody would get bored like a footy player, just bringing it out for one and extending their season.
It's a little bit like the footy player who's he's playing really well, so you keep giving him 1 year contracts to keep him incentivised. So they're keeping us incentivised. It also means that they can re-announce it every year and keep it top of mind, which I think is pretty important too. So if you don't vote, what happens? So there's not much for the big end of town. In fact, they've clearly highlighted they're going to be spending more money on tax avoidance. And unfortunately, where that's largely focused is in high net worth individuals. Now they do vote. And multinationals. And so they're investing $1 billion in that. They're hoping to recover about $3.50 for every dollar spent. I suspect that number is highly underestimated.
And with the wealth distribution in this country, they're only going to lose a few votes by going after that, wouldn't you say?
Well, yes, that's true. I mean, if the government's plan gets put in place, and in fairness, Bill Shorten is doing something not remarkably different. 94% of taxpayers will be paying at a 30% tax rate. That means that there's only 6% that are paying at the higher rate. It's interesting to note that 6% is paying 26% of the total burden, but so the other 94% are paying the 74% of the burden. So if you don't vote, you don't get a benefit.
Yeah. So based on those numbers, is class warfare a bit of a furphy?
Well, no, class warfare is definitely not a furphy. If you look at particularly the response from Bill Shorten tonight, he's going to follow through on at least one of those tax cuts, but those that deliver the greatest benefit to the higher income people, he's not following through on that. He's also planning to introduce abolish, if that's the right word, negative gearing on particular properties. He's looking to tighten and reduce the concessions for superannuation for self-funded retirees. So there really is a bit of a class warfare going on, and it really is a bid for your vote, is the way that I've looked at it.
And in relation to the negative gearing, because I've been hearing for my whole life, as basically the media talks about my inability as a millennial per se, Gen Xer, to purchase a property, negative gearing being the bane of this, and you touched on the fact that it is a singular class, is a singular asset class that this is being applied to.
Well, that's right, and it's more than that. It's only going to be applied to properties acquired after January 2020. So if I've already got a property, and
so he's not going to disenfranchise anybody who's already got the pile of real estate stock.
Doesn't it disenfranchise me if I've already got one? No. If I negatively gear any other asset class, if I negatively gear, if that's the right way of putting it, my business, there's no limitation. So it really is a very targeted And it does have all the hints of class warfare about it.
Yeah, because you said there's no such thing as negative gearing deduction.
No, there's not.
What did you mean? How is negative gearing not a thing?
Negative gearing is a thing, but it's an invented term. So it basically seeks to describe that my interest deductions are more than put another way, my income and my operating expenses, the net of those is not sufficient to cover my interest, and therefore that's the term coined was negative gearing,
as opposed to unbalanced budget, or as in living in the red, living beyond your means.
Living beyond your means, and so it's really another way of describing. I'm not going to allow you an interest deduction. Now. I'm not denied an interest deduction on any other asset class. It doesn't seem to me that it's equitable, if that's the right terminology to use in tax. It's not equitable to identify a singular class of asset and say to those who invest in that class of asset, you're not entitled to that which anyone else is entitled.
Because I can negatively gear my deductions on shares.
I can negatively gear my deduction on shares. In fact,
or my asset write-off as a small business.
up until not too long, up until the Shorten government comes in, I can also get a refund of my franking credits if I'm in that position. So it does appear to be a little. It's targeted at a group of aspirational taxpayers. It's not, as I understand it, the thing that is causing young people not to be able to have access to homes. And if that was the case, why would you only apply it to assets acquired after January 2020? And if that was the case, why does the negative gearing limitation, it's not going to apply to new houses? So there seems to be...
still invest off the plan to grow my Australian dream of owning many properties.
So there's a bit of there's an intellectual debate that's not being fully played out.
Well, that led straight into my next question. As you said, there's a lack of intellectual rigour, although these kind of things play out well in the media. What intellectual rigour would you be bringing to the conversation? What conversations would be good for the nation right now that aren't being had?
What does our tax system, what should our tax system really look like? And what does it really look like? So I said earlier tonight that we've had a lot of tax reform happening under our nose. The number of, or the highest marginal rate now kicks in at currently $180,000. When I started work, the highest marginal rate was 60%, and it kicked in at $35,000. Now, most of that differential between 35 and 180,000 and the rate between 60 and now 45 happened in around 2007. That was a staggering structural change to our tax system. And I'm not sure that there's a lot of understanding or appreciation of the enormity of that change. Tax reform is something that's spoken about very regularly in this country. I'm not entirely sure anyone really understands what it is that they're asking for when they're asking for tax reform. But it perhaps is more a conversation about our federation than it is about our tax system. So why do states levy payroll taxes, land taxes, stamp duties, yada, 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 and the federal government just does the income taxes and the GST? Maybe tax reform actually is a bigger debate. It's a bigger debate in as much as it has to deal with mining royalties, it has to deal with federation, it has to deal with a whole raft of things. And short grabs in the media, dealing only with personal tax rates, is not really it's not the debate we need to have.
In your experience, when a government wins office and then they've said all the things they need to do to get to the votes, how do they actually go back to governing the country and doing sensible things on behalf of the citizenry?
Well, if I had been inside government, I might be able to answer that, but I can't. But there's also an element that says that we're a little to blame for all of this. We are largely ungovernable. Most elections are now decided by very thin margins.
And when you say largely ungovernable, do you mean we simply don't do what we're told?
No, I think we don't allow the governments that we elect to do what we ostensibly have charged them to do. So,
in relation to like Labor blocking the funding expenditure,
well, even
just anything really.
Even more fundamental than that, we forced coalitions of disparate parties together. So when Steve Bracks first got in Victoria, he had to form an alliance. When the Liberals got in, they had to form uneasy alliances. The coalition now has to form uneasy alliances with the Pauline Hanson's group. They're a function of us not allowing governments to do the things that we know we need governments to do. That's one thing. Two, we commit them not to a 3-year cycle, which is what we used to do. We now commit them to the monthly opinion poll cycle. So we, as a collective group, make it very hard for governments to do the things that governments need to do. So what does the government do when it gets into power? Gee, I wish I knew.
And it's interesting to me that we have such a partisan split between left and right, because if everybody, how do I know that I want them to govern, you want them to govern, so how does it turn out that Australians kind of just split down the middle and we're not able to all vote in one direction to let them govern?
Well, now I'm getting entirely outside of my sphere, my proper sphere, but my personal view is that we are a socially progressive, economically conservative nation. And sometimes we mix up those two things. I think one of the clearest examples was the same-sex marriage debate, where clearly the nation showed that we were socially progressive. But the nation also shows constantly that it wants strong management of its finances. So we want both. We want a little bit of left and a little bit of right. That would then beg the question: why don't we have a party that sits centrally?
You talk to the left's view of trusts as a vehicle for tax avoidance.
Yeah.
Could you talk more to that, or it simply is a statement of fact?
Well, I'm not sure it's a statement of fact.
What are they missing?
Well, it's not that they're missing something. It's just that there's a fundamental distrust that the trust as a vehicle allows for more tax or less tax to be paid, which in common parlance would be tax avoidance. So what the Labor government is proposing is that distributions must be subject to a 30% minimum tax rate. And I understand that, but trusts are a legitimate vehicle for protecting assets. And instead of focusing on the potential for tax avoidance, which I think is massively overstated, one ought focus on the rationale for a trust in the first place, which is about asset protection. It's about passing assets down and alike. And whether we like it or not, many of our farms and our small businesses are run through trusts. They are a perfectly legitimate business vehicle, and they ought to be recognised as a perfectly legitimate vehicle instead of some artifice which is nothing more than a means to tax avoid, which is clearly what they are not.
And you talked about reducing the quantum and frequency of superannuation contributions.
Yeah.
What's behind that?
Well, one who is far more adept at matters of superannuation than I suggested that the changes that the coalition announced were more about liberalising access to superannuation, whereas the Labor Party's was more about restraining and constricting access to concessions. It is a philosophical difference, and I think that's almost where I have to leave it. It is a philosophical difference.
Fair enough. And you talked about the foundation stone of the economy being a bank's balance sheets. And I was wondering if going after them post the Royal Commission, what's the implications of an Australia's lacklustre revolt to the banks? Like if we go and go after these people with pitchforks, what's that going to do if that's the foundation of our economy?
My observation was that through the financial crisis, one of the things that was assisted Australia's economy staying very stable through that was the strength and the four pillars of our big banks. And so ensuring that the banks have stable and strong balance sheets is critical to the continued strength of our economy. That ought not be read as saying that therefore the banks should be entitled to all sorts of different behaviours which have clearly been uncovered in the Royal Commission. But my observation was more about if you're going to, if property values are on the wane, and let's face it, the banks have supported a lot of that, the borrowing on those properties. If negative gearing or the abolition of negative gearing has an impact on the value of those assets, then the banks' balance sheets are eroded to some extent, and then their capacity to continue to lend, as we've already seen, will be diminished. So we have a very sophisticated economy, and part of the problem is that when you pull the pin on one part of the economy, it has ramifications and implications, whether known or unknown or intended or unintended, for other parts of the economy. And this underpins the first question you asked about intellectual rigour behind all this. Having a soundbite in a newspaper or on the steps of Parliament doesn't seem to me to be the way that you need to manage an economy. And it needs to have a little bit more of a thought about what, in a highly sophisticated and integrated economy, if I do X, what are the Y's and Z's that are going to happen?
I remember 8 years ago when the EMDG funding was suddenly frozen, and the companies who were relying on it to fund the continuance of their expansion in projects they already had underway suddenly got put on like an 18-month hiatus. And then it was a celebrated fact that EMDG was export market development grant funding was being brought back, and that kind of pin that went off, and that was a hand grenade to a lot of employing businesses.
Well, it's the same as cash flow lending. Many banks, many companies, particularly those that are looking to go offshore and expand offshore, have found that the banks' withdrawal of cash flow funding, and this happened way before the Royal Commission, has severely limited the capacity of those businesses to grow. So one outcome it's like the pebble in the pond.
And Eva, the budget we had to have, what's your advice for your clients out there in BDO land? What would you say to them as a hold tight, keep going?
Well, budgets used to be a State of the Union address, right? I think they're increasingly less than that.
And if I could say the budget and the upcoming election.
Well, I suspect that the coalition hopes that there is enough incentive in the electorate to say, yes, we can trust you. Only time will tell.
Only time will tell. Thanks so much for your time.
Pleasure.